Hi, this is Prasheel coming to you from Mumbai, and you're listening to the Equity Master Stock Market Wrap Up. In today's edition, I'll be taking you through what moved the markets over the week. So let's jump right in. We'll be taking a look at why Tanushree Banerjee, the co-head of research here at Equity Master, calls this market a two-faced market. The Indian rupee is making a comeback and is currently the second best performing emerging markets currency. We'll take a quick look at what's triggering this rally. Public sector banks throw up a positive surprise. Speaking of banks, Yes Bank surged 30% in one day. What happened there? And coming to macroeconomic data, inflation is at an 18-month low. What's the RBI going to do next? This and lots more in this week's episode. Now, a quick look at the broader market. Asian and European share markets were trading muted as disappointing retail sales data in the US and pessimism surrounding the resolution of the US-China trade war pulled down indices. Back home, the Indian share market too was quite subdued and ended the week in red amid uncertain global scenario and subdued earnings at home. With the markets out of the way, let's look at the key stories in focus today. The stock markets, as you know, are very volatile these days. And as Tanushree Banerjee, the co-head of research here at Equity Master, puts it, the stock markets are now two-faced. To give you an example, over the past month, the BSE Sensex has held steady and is down by a mere 0.1%. Meanwhile, the mid-cap and small-cap indices are battered down. The BSE Mid-Cap Index is down by 7% in 1 month, while the BSE Small-Cap Index is down by 8% in the same period. The current scenario in the Indian stock markets looks very similar to 2013. Tanushree wrote about this in a recent edition of the 5-Minute Wrap-Up. It's a must-read, and here are some excerpts. 2018 and 2019 has followed a similar pattern to that of 2013. There is a lot of volatility in the market. It began when the long-term capital gains tax was introduced in the last year's budget. We've seen corporate governance issues leading to auditor exits, and finally the IL&FS impact on financial services companies. And with elections around the corner, the volatility will probably get worse. If you're looking at stocks from a short-term perspective, there's a good chance this volatile market will hurt you. But if you're picking stocks thinking long-term, the potential for India is huge. So plan to ride out the volatility by aiming for the long term. Moving on, the rupee is making a comeback. The domestic currency swung back to become the second best performing emerging market currency in February after getting battered in 2018. The appreciation came on the back of surging foreign fund flows as equity and bond valuations turned favorable following the recent sell-off. The rupee ranks second after the Malaysian ringgit, which has gained 0.5% since the beginning of this month. The rupee rose 0.13% against the dollar during the same period. The domestic unit closed at 71.25 per dollar as of Friday. Do note that the rupee had fallen to record lows of 74.48 per dollar in October. And that is some comeback. It's quite encouraging. Moving on to some uplifting news. In a positive surprise, bad loans of public sector banks fell by 311 billion rupees to 8.6 trillion rupees for the first 9 months of the current fiscal, as against 8.9 trillion rupees at the end of March 2018. As per the Minister of State for Finance, the fall in non-performing assets also came on the back of the government's 4R strategy of recognition, resolution, recapitalization and reforms. Besides, asset quality review initiated in 2015 for clean and fully provisioned bank balance sheets revealed high incidence of NPAs. With various steps taken by the government and the RBI, including the initiation of transparent recognition in 2015 till December 2018, public sector banks have successfully recovered an amount of 3.3 trillion rupees during that period. Now, public sector banks have had a difficult year, to put it mildly. While the bad loan struggle has been on since a decade, there are other issues that have recently cropped up, adding to their pile of misery. Bureaucracy and a lack of autonomy have ensured the suboptimal profitability and asset quality of these state-run banks. However, with the NPA burden going down slowly but surely, public sector banks can look out for a brighter future. Speaking of banks, Yes Bank was the star performer this week as it rose over 30% in one day. The shares of the bank surged as it received no observation on divergence in its asset classification as per the RBI's latest risk assessment report. The development comes as against the 7.5 billion rupees of gross NPAs reported by the lender as on 31st March 2016, whereas the RBI tally came in at 49.3 billion rupees, leading to a divergence of 41.8 billion rupees. Reportedly, the divergence had increased to 63.4 billion rupees in FY17, which was the main reason former CEO Rana Kapoor's tenure was reduced last year by the central bank. Moving on to news from the macroeconomic space, retail inflation eased to an 18-month low at the start of the new year. Inflation, as measured by the Consumer Price Index, cooled down to 2.05% in January compared to a revised 2.11% in December 2018. The previous low for consumer inflation was 1.46% in June 2017. As per the data, the drop in retail inflation in January came on the back of falling food and fuel prices. The inflation rate for services like education and health also fell, bringing down the level of core inflation. Easing inflation can pose an interesting conundrum. Note that in 2016, the RBI adopted an inflation target of 4%, plus or minus 2% for corrections, for the next 5 years under the monetary policy framework. However, since August last year, inflation has stayed below the RBI's target of 4%. The central bank recently cut key interest rates, citing low inflation. And with inflation continuing to remain subdued, it is quite likely that the RBI may go for more rate cuts going forward. We'll be sure to keep you updated about the developments in this space. Well, that's all from us today. Before signing off, we would like to know if you like our podcast. Is there anything specific you want us to cover? We would love your feedback. Just visit equitymaster.com and drop us a line. We look forward to hearing from you. Thank you and happy investing.